Okay, everybody, here we go. It's me, Gregory Mannarino. Monday, July 10th, 2023. This is my pre-market report. There was a lot going on here. The biggest thing, people, is risk. Risk in this market continues to rise. The cavalry has not yet arrived to get in here and start buying more debt and keeping rates suppressed. As a matter of fact, this morning, the 10-year yield is 4.08. The U.S. dollar on a relative strength basis is higher, and the MMRI is sitting at 260. People can't deny that since we crossed this first line in the sand, 250 with regard to the MMRI, there are a lot of detractors to the MMRI, but they've been really quiet as of late. Why? Because, well, the market has been under pressure, and this pressure could really get going very, very rapidly if this continues. If we observe that bonds around the world continue to sell off, world stock markets are in for a real rude awakening. It's going to happen at one point here. Are we there yet? I guess we're going to have to see. But keep your eyes on 10-year yield, relative strength of the dollar, or the easiest way is, watch the MMRI. Again, link to the MMRI in the description of this video here. Now, we get a warning from another Wall Street super bank on this market. This time it's Citigroup. I mean, look, they're watching the same things that you and I are. Hold on one second here. Let's get things in my face a little bit. Yeah. So Citigroup is warning their clients to maybe lessen their exposure to the long end of this market. Again, look, they know what's going on here. They're watching risk in this market as well. And, look, this is no doubt in my mind, and I'm sure yours as well. This is all going to get extremely real very, very rapidly at one point. And every day, it's going to be more exciting to see what happens. I mean, here's the question of the day. All right, the question of the day, and I will read the comments, is, number one, do you believe that this is the moment where we're going to see the debt market sell off in an uncontrolled fashion and rates spike and global markets get hit? Or do you believe that central banks are going to get in here and buy more? I can't tell you. If I were to guess, again, I've covered this a lot as of late. This is a presidential selection cycle, okay, not an election cycle. They've already chosen the next president. And I think it's pretty obvious who they want. The thing now sitting behind the Resolute desk here. And that gets pretty interesting. Hold that thought. So, generally, again, don't take my word for this. I've covered this a lot as of late. During selection cycles here, the Fed tends to prop up the market. But we also understand that we've never been here before. This is where no man, no woman has ever gone. The market is just a freak show on unprecedented scale. And nothing makes sense. What Citigroup here is citing with regard to their warning on the stock market is they're saying the stock market is overvalued. I mean, duh. It doesn't make any sense. The disconnect between the economy and the market we've never seen a bigger gap before than what's happening today. And this is, again, all going to correct to some kind of a fair value, no matter how much central banks try to distort the market and try to keep it propped up. All it does, excuse me, is push off the inevitable correction to some type of a fair value. And we are so far away from that right now. So far away from that right now. Again, no one knows where the bottom is. The bottom of this market could be Dow 6,000 or less, just based on what the Fed did last time, jumping in here during the last meltdown I'm referring to, with quantitative easing one at Dow 6,000, after the Dow fell 50%. So everything since that time has just been propped up on the back of easy money as central banks buy it all, faking the debt market to the highest possible order. And this can't go on, again, as you all are well aware of, without a terrible price to pay. So going back to the selection cycle here, so the Biden administration is doing something that I guess we would all expect. Apparently, people are complaining that inflation is getting out of control and it's very hard for them to make ends meet. So the Biden administration is choosing to point at the pandemic for the current inflation that we're seeing. Oh, it's the pandemic that's causing inflation. It's not the fact that, I mean, look, I understand this, believe me, and I'm not just going to zero in and pick on Bidenstein about this, but this administration has pulled cash into the now, none more so than any other administration before it. But that's how it works. Every single president has to borrow more than the one before just to keep the system going. Again, it's a debt-based system. You all know that. Demands that debt be pulled into the now in greater and greater amounts just to keep, just to keep this whole thing going. Without that, implosion time, we go back to Mad Max. So again, the distractions, the deceptions, the look here. Yeah, we had Christine Lagarde over there blaming global warming for, of course, inflation. Now, we got the pandemic. And then again, they can use the war, they can use pandemics, they can use whatever other excuse they want to, instead of pointing their fingers at themselves and, of course, the current situation with central banks around the world who continue to inflate and buy it all here. And look, here's the next funny narrative that we're starting to hear about. And I talked about this yesterday when I showed you the chart. I don't think I have it anymore, of the Fed's balance sheet. Oh, it's shrinking. The Fed's balance, no, it's gone pretty much parabolic here. It wavers around here and there, but all of these little pullbacks that we've seen with regard to the public balance sheet. Again, there are two sets of books here. Every corporation has two sets of books. The Fed has two sets of books as well. What's off balance sheet, or in the second book that we're not allowed to see, eclipses the public balance sheet by probably trillions of dollars. But you're not allowed. See, we're not allowed to know about this. We have to think that the Fed is transparent and they're letting us see everything that's going on. It's absolutely fake. But again, what would you expect? Gargoyles and things to tell you the truth? No. Inflation, and the other thing is, again, inflation, as you know, has nowhere to go but much higher from here. The trillions and trillions of dollars that are being created out of nothing, the hundreds of billions to fund wars which will expand, especially with this whole thing with the BRICS nations here. There's a real dilemma with regard to the U.S. dollar falling under attack, and it's not going to go down without a really, really big fight here. So you can expect, and I was just writing these things down, pressure on the middle class to increase moving forward. Real wages have now fallen for 25 consecutive months. This is going to continue as well. That is what people are earning based against the actual rate of inflation here. And inflation, of course, will continue to rise. Food inflation is going to outpace everything. Every freaking thing moving forward. And again, they're talking about shortages of food and resources. And I'm just writing here, war. I mean, we're going to see more war, obviously, and understanding, the data is just totally fake, and again, it's part of the whole mechanism here. Looking at this market this morning, real quick, stock futures are relatively flat. They've been hovering in and out of positive territory this morning. Okay, you got the 10-year yield higher, as I said. You got the relative strength of the dollar higher. Risk in this market rising according to the MMRI. Just do me a favor, once a day, just have a look at the MMRI. Again, link in the description of this video. Look at that, and I think the MMRI has nailed it since day one, continues to nail it, and we're going to know what's going to happen here. If we start to see, let's see, MMRI 260, 265, 270, 280, 300, I mean, where do you think the market's going to go? The market's going to hate it. The market could take a big, tremendous hit. It's going to. It's just a matter of time. Again, you and I are clear on this. The real crash, and I'm not saying it's going to happen right now, because again, I think the Fed may get in here and start buying more debt. But the real crash is going to begin and end in the debt market, not the stock market. Everyone's focused on the damn freaking freak show of a stock market. It's not even that. Just the Dow Jones Industrial Average, 30 companies. Look at the Dow. Look at the Dow. This is, the mainstream propaganda. But they don't talk about the driver. Okay, the stock market is a derivative. It derives value from what's happening in the debt market. You all know that better than anybody. All right, people, pretty much that's it. I will see all of you later on for my live stream, 1:05 p.m. Pacific Daylight Time. I got to get that right because people freak out about it. And I have some questions ready for me. Let's go over this. We know what we're looking at. Also, this just real quick. You got gold and silver under a little pressure this morning. Cryptos under some pressure, crude oil under some pressure. The market doesn't look happy. So, I mean, this warning here from Citigroup, I mean, we've been getting a lot of warnings lately, but the market seems to be defying gravity. But there's a new thing going on, and that is this sell-off in the debt market where you got yields that are now spiking in somewhat of a spooky fashion. But you and I, we knew this. We knew this from how long ago? How long ago? Years? Yeah. All right, look, love you a lot. I mean that. Please share the video. Please comment. Thumbs up. Greatly appreciate it. And I will see you later.